Performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak Asset Management Market Wrap YouTube update for December 11th, 2020. I'm Moe Ansari, President of Compak Asset Management and host of Market Wrap. Don't forget these are my views, my observations, the way I'm looking at the markets and my thoughts. I'm going to talk about the pandemic update. We're going to take a look at what's going on with the pandemic. I think it could get worse before it gets better. The markets, U.S. and international markets, we're going to take a look around the world. Also, take a look at the technicals. My favorite, I think technically we're at a point which is at a critical juncture. I'll talk about that in a lot more detail when we take a look at the charts. Let's start with the pandemic. This is an interesting chart. It came from The Economist and it shows that we have about 15 million people that have been infected, but they're saying the real number could be somewhere around 30 million. So if we have already 30 million people that some are asymptomatic, some of them had it, but they don't realize that it was COVID, or whatever it may be, they're saying that it could be as high as 30 million people, then we only need to get another 30 to 35 million people vaccinated to get us to herd immunity. It's about 70 million people that we are thinking about getting vaccinated. That's where we need another 30 to 30 million people, 35 million people vaccinated to get to that herd immunity of about 70, 75 million people. So that is the good news, but unfortunately, we are seeing the numbers. We're looking at the hospital beds. This is the national average, and you can see that we are somewhere around 90%. We are getting close to 90% in some places, way above what the norm is, the occupation of hospital beds. So we have a lot of people that are there. This is just one state, Rhode Island, but when you look at a number of states, they're way above the national average, and we are getting to a point where the hospitals are getting full. If you have COVID, unfortunately, you might not be able to get that. On the other hand, the good news is that people are saying, well, I'm not traveling. Well, the International Air Transport Association, IATA as it's called, did a survey and they found 44 cases of COVID reported in which they thought could be associated to a flight journey. But we've had 1.2 billion passengers that have traveled. So getting COVID while you're flying is not a very high probability. There's a much higher probability that if you go to a very big event where there are thousands of people in a small confined space, that you have a much higher probability of getting that. The number of cities, flights are being canceled. A lot of airlines are just not flying anymore. You look at, we are 36% below the pre-pandemic level. That's where we are right now. One of the most connected cities was New York. It has lost 66% of its connectivity. Los Angeles fell out of the top 10 most connected cities. Now the most connected cities in the world, foremost, are Shanghai, Beijing. They're all in China. So it's just showing that China has done a much better job at controlling the virus. When people are saying, well, it's an authoritarian regime, they've locked down people. Taiwan, 7 people are dead in Taiwan compared to, and they have a population as big as New York or close to it. So when we're looking at the numbers, it's testing and tracing, as I had mentioned about 10 months ago, but that's neither here nor there. Now we're looking at getting to the vaccine, but the vaccine, it should be approved this weekend for mass distribution. The FDA is still going through the paperwork to approve the distribution. It has been approved. They took a vote and they approved it, but it's not approved for distribution yet. It should be this weekend getting out. But still, it should take 30 to 60 days before we start really seeing enough people vaccinated. We have this 60-day hole in the middle. And now we're reaching the peak from the other side from all the travel and all the people, the get-togethers we had on Thanksgiving. So that surge is coming now. And then we also have Christmas, where we have a lot of, again, people traveling, and that could cause another surge. So we've got this 30 to 60-day hole that we have to fill. So many states are starting to lock down again. That is another problem. You look at this is what it looked like last week, the chart. All of the basically it was right here, all of the infection. Now, middle of the country. Now you're seeing it spread out. It's gone from here and it's gone west and east coast. It's going on both directions. It's going this direction and this direction. And it just seems like California is shutting down again, where we are getting indoor dining is closed. New York is going to do it as of Monday. Indoor dining is closed again. So unfortunately, this is going to create some more anxiety and some more layoffs, and people will suffer, especially the workers. I believe, as you've heard me on the daily radio broadcast talk about this, I believe if the government asks you to shut down, it should make you whole. If it is not something of your own doing, but then we have to get Congress to get together, Mr. McConnell and Nancy Pelosi, to come up with a plan, and they're still negotiating. While people, unfortunately, don't have money for rent, don't have money for food, and it's not their own doing. It's the government that has mandated us. Looking at the daily COVID cases, unfortunately, they have just exploded to the upside. We're seeing they're up 27%, 0.6. If you look at the 2-week trend, it is up by 27% or more. It's just exploding, the virus on the upside. Unfortunately, same thing when you get a more infection, you get more people, the death rate, it just follows. Usually it follows about 2 weeks later. Now we're at about 3,000 plus a day. We hit a new high yesterday. So we're looking at just the death rate, the infection rate goes up, the hospitalization rate goes up, and the death rate goes up. But this is just now, we are there, we can't do anything about it. All we have to do is wait for the vaccine. Unfortunately, it could have an impact on the market in the next 30 to 60 days. The market is trying to look beyond the next 30 to 60 days. But if we do get another lockdown, I think we'll have to take down the numbers that we're expecting for the first quarter of 2021. It could impact those numbers. We've seen unemployment numbers starting to go back up again after coming down dramatically since March and April. So we've hit this plateau, and we need to get the vaccine out as quickly as possible. Confirmed cases, they're getting close to about 300,000 deaths. We're looking at about people are 15 million, maybe pushing sixes. But these are confirmed cases. As I mentioned earlier, there might be twice as many people that have been infected. So we're looking at about 30 million people. What does that mean for the market? That's really what so many people are saying. Yes, all of this is great. Market seems to hit an all-time high. It has. It has hit the targets. But I think now, if these lockdowns get worse, if the infection rates continue to rise, if the hospitalization continues to rise, I believe we could see some more pullback in the market, and I'll talk about that in a minute. If you look at the excess deaths, we're still looking at 91% of the excess deaths are COVID related if you're 85 and older. If you're 75 to 85, we're looking at about 63% of the deaths are COVID related, and so on. So if you're 65 and older, you need to be very concerned and have to be careful. But there's good news on the way. We are looking at the vaccine. We've got 6 vaccines that are in limited distribution. You've got a couple of Chinese, we've got one Russian, and a couple of other ones that are already out there. But the 2 that we are waiting for is the one by Moderna and the other one by Pfizer BioNTech. The Pfizer one should be available for mass distribution by this weekend, and then the Moderna one should come out next week, is expected to be out there. But then, once we get the vaccine, you have to get people vaccinated. Unfortunately, if you look at the numbers, France is the most skeptical. Only 54% of the people believe that the vaccine is something they should take. In the US, the number was 64% compared to India and China, which are at the other end. China, 85% of the people will take the vaccine if it is available. This is where we're looking at again. I talked about Pfizer and Moderna. Those are the 2 new technology, mRNA technology, that is a totally new technology that has come in. The old one is based on where they take a weakened virus, inject it in your body like the flu vaccine. It's only 40 to 50% effective. These are 90 to 95% effective. These are the new technology, and I believe that these technologies, not only on this vaccine, but other vaccines and other diseases. BioNTech was working on a cure for cancer using this mRNA technology. They pivoted and used it to come up with the vaccine, but now I believe in the next few years we could see some breakthroughs with this. This is the distribution. We're going to see phase 1 distribution of the vaccine. That is the first one that we're talking about. It goes to healthcare workers, which is 21 million people. We're looking at long-term care facilities. nursing homes, about 3 million people. So that's about 24 million people initially will have the vaccine. Then we're talking about phase 2, which is, or 1B, as it's being called, and those are essential workers. You're talking about food and agriculture workers, food service workers, transportation workers, education, energy, police, firefighters, and manufacturing, communications, and so on. So those are the next 87 million people. And then phase 3, we're looking at adults with high risk. And that's phase 1C we're talking about. That's the next phase. People who have obesity, severe obesity, diabetes, underlying issues. That's another 100 million. And then another 53 million that are 65 or older. That's phase 3. That does not start really until the middle of March. Middle of March going in, or April. So we're looking at 3 months before the people who have underlying conditions, or if you're 65 or older, will get this vaccine. Today is December. We're still looking at 3.5 months from now. That's why I think the market has gotten ahead of itself a little bit. I know the euphoria is there. We all can't wait to get out, but I think it will take time before we get out there. Looking at the markets, one of the things we've seen is the more money you pump in, if you pumped in money some time ago, it had a 1-to-1 effect. But as more money you put into the economy, the less effective it is. Now it's only, if you put in $1, it's only 30% effective. And that's really the thing that we have to think about, that the more, sooner or later, they lose its potency. That's really what is happening with this, with the amount of dollars that we're printing and putting out and so on. But consumer confidence has come back up. I think it will come back down a little bit. In the next, it came off initially, started to come back up, but I think it might take another hit in the next month or two if as we see the vaccine being distributed, but at the same time, the infections continuing to rise, the death rate continuing to rise. That will, I think, have a negative impact. What we are seeing also, another thing that I've noticed is usually the metals and the emerging markets went together. Now, they used to, when the metals went up, that's in red, and when the emerging markets, they're in blue. They used to move hand in hand. Here we've seen an explosion in 2020 in the metals, but the emerging markets are still here. I think there's an opportunity there. They're the most undervalued markets right now. Once we get past COVID, once we do, and we still haven't got past it yet, I believe the emerging markets could be the play over the next 2 or 3 years. Looking at the charts, I had a target of 3,700. We hit that this week. We have, looking at the higher target, it's about 3,800 for the market. But this is wave 3. Everything moves in wave 1. This is 2. This is 3. 4 is down, and 5 is up. Seems like we've come to the end of this wave. Now we do have support right at the 20-day, this red line, which is the 20-day moving average. And then we've got more support around 3,400, 3,450 or so, which is the 50-day moving average. But markets are, I think, fully priced. If you look at some of the sentiment indicators, they are way pegged at the top right now. I would not be surprised to see a 5, 6, 7% pullback, correction, whatever you want to call it. Why? What would be the reason? We'll always find something to talk about and blame the correction or the pullback on it. The markets are fueled by more people buying. The more they buy, the higher it goes. But if everybody's bought, there's no more fuel left. Then we need to get a pullback. All the people who are trying to trade these markets buy the tops, so they usually buy the tops, sell the bottoms. They just keep going round and round in circles. I think we need to have a shakeout or a little bit of a correction. And the third wave, I was looking for the market again. If you look at each one of these green and red lines, they're 1 week of trading. The previous chart was a daily chart. This is what I call a weekly chart. And you can see that the market has gone through wave 1, wave 2, wave 3. And we could see a 4th wave pullback. That's wave 4, before we start on wave 5 back to the upside. So at this point, I think the next, we've been sort of going sideways for the last couple of weeks in the markets. I would not be surprised to see more of that. And this might be the opportunity for, unfortunately, the people that got pushed out in March. Then they did not get in because of the virus, or then they said, oh my God, the election is coming up, I don't want to get in. They missed one of the best rallies they're going to get in their lifetime because they were sitting on the sidelines. This might be the opportunity for those people. if you're fully invested right now, you have to have a diversified portfolio. I believe that we are going to see a slowdown in the FANGs for 2021. I believe the other 495 companies will do well. But right now, the optimism is a little too high for my comfort. Would not be surprised to see a little bit of a pullback. This is your time, really, right now, to get a year-end review of your portfolio. If you're one of those who emotionally got pushed out of the market, this is your opportunity. You need a personal trainer. That's what you need to keep you healthy, to keep you, I know it's not fun to work out, but you need a personal advisor, a financial advisor, to keep you financially on track, to keep you from making the emotional decisions. All you have to do is simply go to Compak.com, ask for a free review. You've gone through the whole year. Another year could go by, or you can participate and at least get another set of eyes to take a look. Just click on the link below to get started, and we will do an absolutely free review of your portfolio and give you an emotional number, your emotional risk number, your financial risk number. Then we'll match it with a portfolio that matches both for you. But it will not happen by itself. You have to make the click on the link below, ask for a free review. There's no cost or obligation to get that done. Here we're looking at the daily Nasdaq chart. Again, we're looking at a fifth wave, which usually is the end of the move. I was looking at about 12.8. We got to about 12.6. Now we're starting to pull back. We touched the 20-day moving average. Next support is the 50-day on the downside here. Same thing we were looking at on the weekly chart. We reached the target. On the weeklies, the targets are a little bit lower, 12.6, 12.5 to 12.8. We got to 12.6 this week. If we do get a fourth wave pullback now, that could take us down before we go back up. So it would not surprise me now. Technically, we're there. Sentiment indicators are pegged at the top. Everybody is very bullish right now. Everybody feels good about the vaccine coming out, but I believe the reality over the next 30 to 60 days could not be as nice. Gold market, this is again a weekly chart. Once it broke out above this resistance area last June, this is June of 2019, it just took off to the upside, hit a third wave, it came back to the fourth wave, the 50-week moving average, kissed it this week exactly. I think that's about, it got just below 1800, and I think that's about as low it's going to go. We could see, my opinion, again, the way I'm looking at the charts, again, if the stock market comes back down a little bit over the next few weeks, we could see another rally in the gold market. But again, gold is not, I believe there's other opportunities. If you have not been in the stock market, you should have a list ready for the stocks you want to buy. I know so many people call me and say, "Mo, I didn't buy because I was afraid it was up." When it starts to go down, they say, "Oh my God, I don't want to get in while it's going down." Guess what? They never get in. So that's where you need somebody to sort of work you through and get you into the markets with the right risk tolerances, with the right looking at your preferences, your risk tolerances, your time horizons, and doing that analysis, not just buying any stock willy-nilly. Make sure you tune into the daily broadcast, Market Wrap. You can get the daily update directly to your smartphone. All you have to do is click on the link below and get that. Again, thank you so much for tuning in. I will be back with you next week. Have a wonderful and safe week. Look forward to talking to you then.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indexes through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.